To Weekly Profit Talk. We do this every single Wednesday at 8:30 Mountain Time. Today's topic is married with children and taxes. A little bit of a spinoff from one of my favorite shows of 20 years ago. Has it been 20 years? Probably longer, actually. In any event, the reason for this topic, first of all, we talk about all things profit on this show every single week. Uh, and one of the things that profit affects directly is the unfortunate and unforgiving need to pay federal income tax. What we want to touch on today is also state income tax related. Not every state has an income tax. There are a handful that do not. I'm thinking Alaska, Washington, Texas, Florida, Wyoming. Those are the ones I know. Oh, South Dakota is another one. There are 41 states out of the 50 that do have an income tax, and District of Columbia does as well, on um, business income. And so that means that this affects 82% of you state-wise. I don't know what the population thing is, and it's not important. What is important is this. If you're married and you have children, and you've been filing your taxes for at least a year or two, then you're probably very happily aware of the fact that you get something called the child tax credit. The child tax credit went absolutely crazy in 2021. And then again in 2022, they actually even started paying it in advance, which was a whole lot of fun for us tax people, let me tell you, because there were letters explaining how much you got, and you had to kind of count on the IRS to have a lot of extra logistics in place, like they didn't have enough to do already, and they've been completely backed up on mail since 2020, and they're still recovering, honestly. So anyway, the child tax credit has been a lot of fun, but it remains at the level that it was after the Tax Cuts and Jobs Act that went into effect for tax year 2018. Is at $2,000 per child under 17 in your household. If you and your spouse's combined adjusted gross income is $400,000 or less, you get the whole $2,000 per child. No limit on the number of kids. So that's fairly wonderful. If you do make over $400,000, you're still there's a possibility, that you're still eligible for some portion of the child tax credit. It just gets calculated based on the number of children, your income, some other things. But let's say that you're fairly recent in business. You've been running your physician practice for somewhere between 2 and 5 years. You're right around that $400,000 mark. Hopefully, you've elected to take the S corporation election. You're taking some of that in reasonable compensation. The rest you have is corporate net income. Okay. So at the end of the year, you've got a certain amount of income sitting there, and you have been calculating your taxes based on the fact that you're getting that child tax credit when you make your estimated tax payments. Now, this is assuming that you're making estimated tax payments. If you're not, we need to get started with that this year. And that's another reason that I'm on tax specific subjects. It is tax season. That's one reason. But the other reason is the estimated tax payment deadline for the first quarter is coming up. It's the exact same day as the 1040 deadline, April 15th. So here's what we need to do. And I'm going to share something. So let me go ahead and do that. By the way, if you have any questions during this presentation, please do go ahead and pop them in. We're live on Facebook, LinkedIn, and YouTube. I have a consolidated chat feature. So if you type something into the chat, I'm going to see it no matter which media you're on. So let's see, this should pop into here. Okay, so the problem here is, and I see this quite a bit, as we get to the end of the year, and we've been calculating federal taxes, and for folks around 100 to maybe 150,000 bucks a year or so, they find that you owe a lot of money to the state. I'm in Colorado, and we have a tax based on a strict percentage of the federal taxable income. Many other states do it that way. Others do similar treatments. They have their own deduction levels and try to copy the 1040, the federal form. But in any case, what happens is that we've been calculating your taxes throughout the year, and you don't owe much to the federal government, but all of a sudden there's this larger tax bill to the state. And if you live in Colorado, as I do, and so do half of my clients, they also have a underpayment penalty for owing over $1,000 in tax, and it's ugly because all of a sudden you have a tax bill you weren't expecting. On top of which, they're also going to calculate underpayment penalty, and they will not waive it. They're not very much fun. Matter of fact, I find them more difficult to talk to than the federal government, but personal experience. And of course, there are 40 other states with a business income, so who knows? But here's the thing: is we're getting to the end of the year, and you're doing pretty good on the federal, but you owe a couple thousand, maybe even more to the state government, because the states not have a child tax credit of its own. And the problem is that the tax credit reduces tax, but it's not reducing income. So the state tax is still calculated on the income you made, but you don't get that nice credit to go along with it. So let me go ahead and we'll move on to this. And like I said, you can be calculating your tax throughout the year for the federal and kind of overlook the state very easily, assuming that it's going to be less. And for most people, it is. It certainly is if you're single. And by the way, I'm going to touch on this real quick. If you're sitting and asking, well, what if I'm a single parent, but I have children? Yes, you get the child tax credit too, but it spoils the title of my presentation. So just to let you know that. So what do we do about it? The important thing is that the state is going to have its own tax obligation, and we can no longer take for granted when you're at the point where you're reporting six figures of income or more. We can't take for granted the fact that you're going to be paying less tax to the state than the federal government. If you have the child tax credit, in fact, the chances are you're actually going to be ending up paying more. So we need to know our state's income tax percentage and deductions. We need to make sure that we sit down and include them in our calculations. And remember, as I told you before, the deadline for this is April 15th. It has been my experience, and we do work for a number of states, not every single one of them, but for those states that do have an income tax, their estimated tax payment deadlines almost always match the federals. They are April, June, September, and January 15th in that order. So let's keep a really good eye on the state because it's important as well, and keep the nasty surprises down on the minimum. Remember what I always like to say. The target is to have a balance due of less than $1,000 or a refund of less than $1,000. And that counts for both the federal and now the state too. Very important to include them if you have kids, because this keeps happening. It's been happening in my practice. I have several clients that have 3 or more children, and so they have fabulous federal tax returns, but they get this nasty shock with the state. And this is what I want to do to eliminate that and make sure that we're going to be doing good tax planning completely across the board, because taxes are an ordinary and necessary expense of doing business in this country. Now, I think it's kind of extraordinary, and we can talk about how much we hate taxes all we want, but the thing is, they're there. Yes, they are constitutional. Look up the 16th Amendment, so there's no getting away from it. So let's just take care of this in advance and keep our room tidy. And at the end of the year, we're basically doing a tax filing that reconciles all of our metrics, and we know how we're doing, and we can move forward with actually making good tax payment estimates in April rather than owing a bunch of money to either the federal government or your state. So let me wrap up on that. I'm not getting any questions. So, and yes, until next week, let's keep an eye on that. We do have 32 days left until those deadlines for both the 1040 as well as your estimated tax payments. So there'll be more on that in the weeks to come. And in the meantime, have an awesome day today, a great weekend. If you are in Colorado, stay warm and dry. We are getting a little bit of a blizzard today and tomorrow. So be safe. And most of all, if you have a chance, do something randomly kind for a stranger. And until next week, we do this every single week at 8:30 a.m. Mountain. That is 7:30 on the West Coast, 10:30 on the East Coast.